Hello, everyone. Thank you for joining me for another episode in the Dealmakers Series, where I'm interviewing some of the top deal makers here in DFW. Today, I am joined by Jimmy Watson. He is the managing director for Clavis Capital Partners. Jimmy, thank you so much for joining me today. Give us a little bit of intro on yourself and what you do with Clavis.
Yeah, thanks, James. I appreciate it. Great to be here and great to be a part of your series. So I've been with Clavis for about 7 years. We are a lower middle market investment firm focused primarily on industrial services, specialty distribution, and niche manufacturing businesses. Sort of think old world stuff that are at an inflection point and kind of call it the coming of age into the new technology and new environment that we have here. We focus on looking for an investment with founder owned, entrepreneur run, kind of owner operator businesses. That's really our forte. Our whole team here, I guess Clavis has been around for a little over 10 years. Our whole team here comes from P&L leadership, hands-on consulting and entrepreneurial background. So we really like to get in and get involved with those businesses. And that's really where we thrive, right? It's someone who's been in the business for a long time, has a lot of ownership and just needs some help growing their business or getting it to the next level. They're really sophisticated, institutional capital backed, well-developed teams don't necessarily need our advantage. And so we can be a great partner for them in some situations, but we seem to be better partners for the hands-on opportunities. So that's kind of us. We've done 600 million of enterprise value over probably about 20 total transactions, 9 platforms in the last 10 years or so. So pretty active investors, but very, very focused on what we like.
That's good. That's awesome. And I'm looking forward to your insights today. I know that you were recently nominated for an award by DCEO, so congratulations on that. All right, let's get right into it. First question. So, give us a little bit of your insight on this year. How would you describe the state of deal flow as it pertains to DFW or Texas or even the country as a whole? What do you see?
Yeah. I think there's a two-part answer here. One is the businesses in Texas. You're just seeing a flood of not just talent, but companies coming to Dallas or wanting to expand into Dallas. So you're seeing a lot of businesses that have had really successful growth and are now coming to, owners want some sort of liquidity or institutional ownership wants to, take some chips off the table there. So you're seeing a lot of deals, I think, disproportionate in the Southwest, Southeast than you would, I think, in the Northeast, Northwest, for instance. But that's just my perspective. And the second piece of a lot of the are companies wanting to get exposure into the Texas and DFW market. So we're seeing a lot of businesses in the peripheral states that want to grow in. So they're looking for Texas-based or Texas investment partners that know the market. So, they would be part of an add-on strategy or could help with an add-on strategy, say a Tulsa-based business that wants to get more into the DFW market. So they're looking to transact for strategic help, things like that.
Interesting. And you mentioned how there's a little bit of a difference between Southeast and Southwest to the Northeast, I think it was.
Yeah, this is very much my perspective. This is where I spend more of my time anyway, so I could very well be wrong. But what we've seen, you've got businesses and people that are moving south to business friendly states. And I think that's part of it where you're seeing more attractive transactions down here, growing businesses. They're, definitely positive businesses all over the country, but you're just seeing, I think, a disproportionate amount of businesses in the Southeast, Southwest, and the Midwest. I think the Rust Belt has a resurgence in and of itself, but you're just seeing those businesses that have really strong tailwinds. And so you're seeing investment dollars flock to those where, again, totally anecdotally here, but we're seeing higher multiples and more interest on businesses with kind of focuses in those regions.
Interesting. It's a good insight there for sure. As far as within your portfolio, or as far as you can tell, at least, where are you finding value? Whether it's geographically or in certain industries, or maybe structures or company size. Can you give us a little bit of insight around that?
Yeah, a lot there. It's probably its own 30-minute conversation on those kind of pieces. From our perspective, we're looking at kind of two core things. One is, especially in the current short-term view, there's uncertainty on costs and labor prices and stuff like that. So spending a lot of time focusing on an attractive labor market, not just from labor costs, but the labor pool, right? You've got people flooding to larger MSAs, more attractive MSAs. So you want to make sure you have the talent for upper management, not even C-suite, but upper management roles and stuff like that. So just from our view of where we want to spend our time in growth, it's in kind of more fertile areas. The other side of it is our There's a lot of services businesses and distribution as there's more industry and businesses come to, say, Texas, right? Data center is a huge thing here. A lot of things go into a data center. A lot of things go into the components that go into the data center. So thinking about where we can play in the supply chain of that has been a particular focus. Two businesses in particular. We have an environmental services, material handling, wastewater treatment business up in North Chicago and Waukegan called UCC Environmental. They help power plants kind of stay running, but also help address EPA regulations. So cleaning out some coal combustion residual ponds and stuff like that. It's details I won't get into the nuance of it all, but they're keeping power on, which is helping support data centers. So where can we play in the infrastructure of electricity for data center growth? On the other side, we have a HVAC distribution company based in Orlando, a newer investment of ours. They provide HVAC units for modular buildings, including equipment buildings, telecom, data centers, stuff like that. Huge growth potential in that business. We're looking for more areas we can support data center based customers or end markets and stuff like that. It's a great place to be in. It's kind of spending a lot of our cash flow reinvesting in add-ons or leadership team that know those markets, trying to get in and get a better foothold in it. Kind of like very much beachhead like investments.
Interesting stuff for sure. And that point around data centers is good to hear as well. I think that's a huge opportunity that I'm not hearing a whole lot of people talk about. I don't know if they're being quiet about it strategically or if they're just not interested. I'm unsure, but we'll
Well,
have to come back to that for sure offline.
oh, we went to a trade show a couple weeks ago, and I think every booth said data center somewhere on there. Whether
Really
just to get you to walk up or show up, whether they actually did it or could do it or say they could do it, everybody was saying data center. It's really, really interesting.
interesting stuff for sure. So let's shift gears a little more macro. How would you describe the current climate with interest rates and now tariffs being introduced in the conversations? How is that impacting deals?
I'll preface this with whatever I'm going to say is going to be old news tomorrow.
Right. Yeah.
But what we're really spending our time on are there's a no doubt a lot of reactive measures on how we're managing a tariff or how we're managing supply chain and things like that, planning ahead for interest rate cuts or not cuts. But I think the real place where we're spending our valuable time is thinking about all the risk areas and sort of putting into place plans so that if something happens or doesn't happen, we kind of already have a playbook. Now that's always ongoing and everything like that. But for instance, we get parts from all over the world for most of our portfolio companies. How are we thinking about strategically sourcing from the US? So going ahead and getting, even if it's a little bit more expensive or longer lead time, but just getting approved vendors domestically as backup plans, or thinking about what is not just the price increase that we might get from product sourced from, say, Mexico or Canada, but what is the communication that we want to have with our customers so we can be more proactive on that. We're thinking about ideas of, do you pass price on to a customer, or do you put sort of surge pricing as a line item that lets them know that maybe it's more temporary, right? It's trying to keep our relationship with our customers so that we're not looking like we're just trying to get all the price we can out of it. We want our customers to realize like, hey, we're getting hit too. We're in this together. And it's a little bit, so it's a lot of communication and it's a lot of internal team planning. It's kind of as best as I can give you now. I mean, it was a different story last week than it probably will be next week, but it's a constant dialogue. That's for sure.
Yep. No, that's good stuff to hear, though. I can appreciate that even as a marketer. Having the relationships with your customers is everything, and having a transparent relationship is gold, honestly. So that's good to hear. So let's talk about what new trends are you seeing or implementing in deal structure? How has it changed from last year and now the year that we're in?
Yeah, I think last year was the big year of, and then probably the year before that too, buyer seller disparity on pricing. And it's a lot of the story of how do you bridge the gap. I feel like there was a lot of earnouts. I mean, earnouts have been a thing forever, but a lot more earnouts introduced, more creativity on the earnouts. We have tried kind of two strategies. One, trying to get the sellers comfortable with certainty to close without, or a smaller earnout, more so tying to, hey, we're going to try and just get this deal done. You want to get it done. Most of our sellers also are rollover equity. And so they're participating in the next bite of the apple. So trying to frame it more to focus on that. The sooner you can get help, the more and faster we can grow, hopefully. This other side of it is being very upfront with sellers. Timing to close is longer. earnout structures are, there's a recency in many sectors just because of what happened over the last 3 or 4 years. So trying to bridge the certainty and confidence in that. So it's being upfront, not surprising somebody at, a retrade or anything like that. It's one of our kind of core pillars when it comes to deal making, is trying to be as honest and trying to stand by our word and kind of how we structure it. We don't want to be known for the group that retrades people. That never works out well for the long term here.
For sure. So, okay, last question. And this is more for the year. And I know, kind of like you mentioned a moment ago, it's a moving target. What's true this week will probably not be next week for sure. We have that kind of volatility right now, but maybe broadly, what is your outlook for 2025? How do you think the rest of this year might end up shaking out?
I would love to hear your investment bankers that you've interviewed and some of the CPAs that are doing sell side, QOB work, and what they're hearing ahead of time, because they generally get a better sense, I think, than we're the ones who are starting to receive deal flow. But everything we're hearing in the 2025 calls we've had already this year with our investment bank partners, our second half is the big boom year, right? Everybody's, for whatever reason, they're waiting for some stability, waiting to see how tariffs play out, whatever works. And thinking to release deals at the end of the year. We heard that also, that there was going to be a big heavy release of deals before the election. We heard that they're going to be released right after the election. So take what you want from that comment, but we are starting to see things pick up, which is exciting, right? You're seeing a lot of dry powder notes, a lot of LPs wanting liquidity. I haven't seen CVs necessarily pop back up, which I think is probably something to keep an eye out for. But at some point, people do have to exit businesses, especially when you have fund lifetimes and things like that, right? We have the benefit of, we partner a lot with family offices, so we can avoid that. But regardless, there's going to be a lot of deals. They're going to be this year. I think the question is it a flight to quality like it has been, where everybody chases the A's and A plus deals, or are you going to see a lot of investors getting back and comfortable with the B quality assets? We don't mind necessarily playing in that space. We like, our hands-on approach that I told you before allows us to manage a little bit more ourselves and get comfortable with that. But I've got to imagine that with all the investment groups out there, all the money out there, someone's going to need to start buying more than just the A quality assets. So I think it's going to pick up. That's a long-winded answer for you there. I would imagine, and I like to think that this is going to be a busy year for us all. We're all sort of gearing up for it. But that's as best as I can predict with my crystal ball right now.
Yeah, no, that's great. Hopefully that will come to pass. I think I agree. It would be nice to have that kind of deal flow that's not just the A's and A pluses, so we can get more capital into the game, get LPs happy again, and all that, deploying capital and getting return. So that would be excellent for a lot of my friends too. So Jimmy, I appreciate your time. Your insights are fabulous, and for those that are watching, hopefully this was useful for you guys. If you want to see more of these interviews, you can catch them exclusively on my YouTube channel, and you can learn more about the Dealmakers Series on my website, jamessaki.marketing. Thank you for tuning in.
Thanks, James.